Hi, this is Raghee Horner, and I want to ask you something. For today's Daily Trading Edge, I want you to consider what if you could actually know the likely price range for the pair that you're trading, not only for the day, but for that particular hour. How would that affect your entry timing, even the consideration for whether prices could reach your entry price target? How would that affect your profit target placement and your risk management? I mean, especially your risk management. What if you knew when volatility typically increased or decreased throughout the 24-hour trading day? Having information like what you see in front of you right now, understanding the pip movement range for a specific pair, for the cross rates, is very helpful. I can see, obviously, here's the pound yen, and the kind of volatility that I could see to the high range, to the low range here, and then on average per 24-hour session in this particular pair, and I can see all the other typical price movement ranges for the pairs that I may trade. And knowing this, generally speaking, so I understand what kind of risk I'll be taking, for example, if I'm trading the cable, the British pound US dollar, versus something that's a little bit quieter, like the dollar yen, or the dollar Canada, or the Australian dollar US dollar. If you're a new trader, heck, even if you're an experienced trader, understanding what your risk tolerance is, and then likely which pairs could present more risk, and I am going to equate higher price movement to risk, because most people equate that to profit, to reward. In my opinion, that's very dangerous, because the way I look at it, a lot of people love the pound yen because it's volatile and they think about all the pips they could make. I look at that and I think about all the pips I could lose. So temper your risk and reward expectations and understand how certain pairs could provide a more quiet trading environment comparable to other pairs. So what are some of the more volatile pairs? You can see here, there's a group of them right here. Take a look at the average. Okay, obviously the pound yen, the cable, the British pound US dollar. Here's the pound Swissy. Even the euro US dollar is fairly middle of the road, I'd say. The euro yen can be fairly volatile. So understand where risk plays a part in terms of your price movement range. We can actually dissect this. Now, once you've understood which pairs might be appropriate for you or not appropriate for you, you can actually then dissect this and understand the hourly implications of price movement range. So that Aussie I mentioned was fairly quiet. I can take a look at the last 6 months of activity. Even I can look at the last 1 month to get a very near-term psychological perspective of volatility in this pair, and understand at which times, and this is Eastern Standard Time, it's a 24-hour clock, 11 p.m., midnight. Here's the heart of the U.S. session here. And I can get an idea of when volatility increases and decreases. I can get an idea of the typical price movement range or pip movement range per each hour. We can then dissect this one step further. And I can take a look at the expected price ranges depending upon which time frame or my time outlook. Am I looking at movement over the next 30 minutes, 60 minutes? Am I looking at the potential movement over the next 4 hours? And I can see what the projected price ranges may be. This would be resistance. Down here would be support. This does not mean prices will hit both these levels, but this could be the range within which the Australian dollar, US dollar will trade over the next 15 minutes, over the next 30 minutes, over the next hour, and so forth. This also really drives home a philosophy that I believe in, which is larger time frames present, because of the pip movement that can occur over 24 hours, more risk. Each candle of 15-minute chart, for example, right now, this particular chart might be moving a whole lot less. Basically what we're looking at here is 22 pips versus what could happen over the next 24 hours. I bring this up because today we'll be launching our 6-part series on understanding price movement and how they affect your trading times. So thanks for joining me.